Hi, everyone, and welcome to this week's edition of Mish's Market Minute. I am Michelle Schneider, your host, and I always like to thank StockCharts TV for giving me this forum each week. So it's been quite a volatile week, and yet somehow miraculously, as I'm speaking to you on Thursday, the market is finding some level of support, particularly the small caps, which look like they were going to completely fall apart, and then buying came in, possibly on the news that the variant of the virus isn't going to be the deadly thing that everybody was sort of fearful of. Nonetheless, I thought it would be a great week to discuss bottom picking, and I wanted to look at it through a very strategic and scientific way. One is looking at different instruments, and I've chosen them randomly on things that are either in a distribution or a bearish phase. And then how do we know it's an actual reversal? So we have two excellent means of looking at it through our ECP plugins. One is a mean reversion using Bollinger Bands, and the other, of course, is a divergence in real motion. So let's get started. So we're going to begin by talking about what is a distribution phase, what exactly is a bear phase, and how do we use the mean reversion and the real motion divergence to make these bottom calls with good risks. And here's a list of the symbols that I've chosen. You can see they're going to be random, everything from tech to biotech to cannabis to financials to alternative energy to actually the euro. All of these could be ripe for some kind of reversal if indeed the market turns out to hold up. Okay, let's go to the charts. All right, I thought we would begin with a Chinese stock. This is Baidu. And the reason why I chose Baidu is for a couple of reasons. Number one is this has come off hard from when it peaked high back in January, February of 2021. Number two is it's in actually a distribution. Well, actually, it's in a bearish phase, and we'll talk about that in a moment, not a distribution phase. The actual leadership is not really all that bad against the benchmark, and we're getting a very interesting potential diversion in real motion. So if you were waiting for the right opportunity to get into one of the big Chinese stocks thinking the worst might be over, this could be your ticket. So first of all, let's discuss what a bear phase is. I wrote a whole book on this called Plant Your Money Tree, A Guide to Growing Your Wealth. But in the book, I actually use weekly phases using the 50-week and the 200-week moving averages. However, that's probably more for longer term swing trades. And so we're going to switch that to the same principle, which is a bear phase using the 50-day and the 200-day moving averages. The 50-day, of course, is in blue, and the 200-day is in green. When we get this sort of death cross that you saw here back in June, that enters a bear phase. So you need three criteria really for a bear phase. Number one is you need the 50 underneath the 200-day moving average. Number two is you need the price beneath both moving averages. And number three, generally you need negative slopes on both of the moving averages. And clearly you see a negative slope here in the 200. You see a negative slope in the 50, although it's potentially starting to actually neutralize a little bit. So another reason why I chose this is this actually did have a mean reversion back here in August, and you had a nice move up from there. Now that we've come off, we're getting another mean reversion, or at least we had one here in price. We didn't quite have it in momentum. However, we can see that we have a pretty good risk here because the low on this is the low price on this is 135.89, and right now it's trading under 150 at 149. But you can see even with this most recent correction in the overall market, this did not go on to make new lows. So that means now we're getting actually a new level of support, I would say somewhere around 144. But the reason why this is on the list is also because if you look at the momentum, even though we haven't quite cleared the 50 yet, we did have positive momentum coming into this most recent move down. And now it's possible that we may get another move above this 50-day moving average, in which case you have two choices. Choice one, when it comes to a bear phase, is wait for a phase change improvement. And that would mean two closes over the 50, which would put it into a recuperation phase. Or you could use some other such signal. In this case, when you have a period of consolidation like this, the case might be more of a move over the most recent high of the consolidation or than over 155. So certainly I would write down with BIDU that 155 would be a good level for this to cross, and you could probably risk about $10 or 145, which for a stock like this isn't too bad. Other choice, of course, would be wait for that phase change. All right, so this one, British Petroleum, came up as a distribution phase because you can see here as of yesterday, this today being Thursday, as of Wednesday, this closed underneath the 200. So what is the definition of a distribution phase? Is when the 50 is still above the 200, but the price closes below the 200. So we went into a distribution phase, then we went back into a better phase, then back into a distribution phase, then back into a better phase, then back into now, of course, here we are back in a better phase. And that better phase, of course, being a recuperation phase. So in this particular case, what we have right now is a situation where when you start to change phases up and down like that over and over, it tells you that the stock is getting ready to do something possibly a lot bigger. Now, we did have another mean reversion here with the Bollinger Band because we were below it and now we're above it. So that's good. We've come into the resistance here. And if we look at the real motion indicator, we also had a divergence with the Bollinger Band. So the fact that this is actually changing phases back to something more positive from the distribution phase means that this is a really good one to keep your eye on immediately. And also you can see right here that it's showing leadership now against the SPY. So the whole energy space, in this case, part of the XLE ETF, which I have covered with you before, is showing relative strength to the rest of the market. So what would I do here? I would wait now to make sure that we get a second close over this 2614 level. And if it does, you can use probably a little bit of a lower risk. I'd give things more room in this volatile environment to, let's say, under 2540. But then you could possibly get in looking to see from 27, let's say, so risking about $1.50. Can you get $3 move, or can you get a move back up to recent highs here over 30? And certainly this is showing some level of possibility. Now, we certainly are not seeing anything killer in terms of momentum. That's just one of the indicators, but the leadership is good on this. So keep your eye on British Petroleum, because it could be, especially like I said, if the market doesn't fall apart from here, we might have a nice opportunity to see a good move up further in the oil and gas. Next one is an old friend, DDD. And I'm actually going to put the underscore here because it seems like with my charts versus the stock charts on TradeStation, that often underscore gets us in alignment with how our moving averages look. So this definitely had a death cross. It's in a strong bear phase. You can see the leadership is terrible. And at this point now, we haven't quite gotten anything really delicious here in terms of a mean reversion trade, and certainly not here in the price. But the reason why I wanted to show you this one is because if you look at the whole chart picture here, even though we've come off tremendously from recent highs, we're still very, very much above the 2021 lows, which tells me that this still has a potential to move higher. So what we need is a couple of things here. Number one is we need a new 60+ day low, which we're actually getting as I'm speaking to you today. So the low here is 2109. We need that to hold. The next thing we would need when you listen to this on Friday would be a close over 2232. Then you would have a really tight potential risk to getting in to see if maybe you can get, let's say, a $4 move. Even a $4 move would get you up closer to the moving averages before you saw a profit, with the possibility of maybe DDD finally for 2022 playing some catch up to the rest of the market. So I like this one too on a possible reversal trade using that 60-day low. And secondly, also to see if we can get some little bit more traction here in the real motion indicator. Next one is eBay. Now, eBay is actually also in a distribution phase, but may not confirm. So this one also interests me for that reason alone, is that when we look at this big correction and you look where prices were in some of these instruments at the beginning of 2021, the correction's not that bad. I mean, it went up and it's given back about 50%. So I kind of like that. Obviously, no leadership here against the SPY, and we're not doing all that great in the real motion indicator. So you can be a little bit patient looking to see if this would be a classic mean reversion. So what does a classic mean reversion mean? It means that, first of all, you're going to get a breakdown under the Bollinger Band, which you see here, and then it comes back through the Bollinger Band. And the same thing with the real motion indicator. It breaks down under the Bollinger Band, which is the dotted line, and it comes back through. If both of those cases happen, not only do you go from a distribution phase back to a better phase, but you're sitting here right on that 200-day moving average, which means that you can actually see if it can hold 66-ish as your risk, and potentially I'd say maybe get in a little bit higher, maybe around 68, 69, to see if this thing has some legs to the upside. But this is a really good way to be using those indicators that we have for you. Next one is another one. I haven't traded this one since 2020, actually. This is FSLY. It's a tech software company. And again, it made a real big low here back in August. It hasn't done anything. And then it had another mean reversion trade here and tested all the way from the 50-day moving average up to the 200-day moving average. And now it's back here in a bearish phase. Never really left negative phases here. Went from a recuperation phase into almost an accumulation and now back into a bearish phase. So in this particular case, if we look at the momentum indicators, they've come off, but they were trading above the 50 up until the last couple of days when the market had the sell-off. But you can also see that we've held this low here. So you have a pretty good line in the sand at about 33.80. Now, this is a new 60-plus day low we're seeing here. If in the next couple of days, looking at next week, this clears not only the moving averages and momentum, but can leave some kind of reversal pattern, which means today's low would be the printable low and it moves up above 37.60. That too could be what was a very popular stock in 2020 return for 2022. Now, the other one, if I were going to go into cannabis, and of course we've seen cannabis do nothing but collapse, but if I were going to go into it, I probably would choose this stock. This is GrowGeneration. Now, what you can't see with GrowGeneration right here is that it also is sitting on the 200-week moving average. And I'm not going to switch screens here, but about 1504 is actually the 200 weeks. So that gives you, again, some kind of line in the sand, but we need a reason. Momentum is not doing so great here. So the first thing we would need is for at least this to hold above the Bollinger Band, ideally to get back over the 50, which it was for like a nanosecond here back in early November. The second thing you would need is a complete reversal pattern, which means today's low would have to be the tradable low at 1501. And we would have to get a close, let's say Friday, over the high of 1617. And then maybe the bloodbath within the cannabis sector could at least be somewhat of a probe. The next one is actually one that I had talked about that looked like it was going to start to do something here, and then it never really did anything. In fact, it reported gapped lower, and that was the end of this stock. But it's IBM, and the reason why it's still on the radar is we've made new lows for 2021, as you can see here, number one. And so we have sort of a pivotal area here around this 117 level. That's where the low was back here in January. It was 117.36. So we're trading at 117.30. Then we got a new 60-day low here with a gap up. And since then, it's sort of been consolidating. Actually, believe it or not, showing a little bit of leadership against the SPY. And even though we're not killing anything impressively in terms of the real motion indicator, we're at least consolidating. So with this one, what I would probably do with IBM, if I were interested in getting into it, is I would wait for a move over 120. And if we can get a move over 120, then I would probably say your best risk would be to under this low at 114.50. And then you would have to hold. So some of these bottom picking stocks, remember, assume two things. One is that the market isn't going to collapse further. And two is that you can afford to sit through a pretty wide stop to see is as we get into the end of the year and into next year, these things have some legs to the upside. The next one, even though this whole industry, of course, with the variant has gotten hit once again, is, whoops, I didn't mean to do that. Hold on, is JetBlue. And JetBlue right here is also sitting on new low. Look at the real motion indicator down here. We're just back over the dotted line. Obviously, we're not at any kind of leadership against the SPY, but we recently made a new 60-day low at 1286, and we're getting an inside day as I'm talking to you, which tells me that over 14 with a risk down to about 1250, this wouldn't be a bad do. So just to sum up this one, you could see there's a lot of resistance here around 14. So over 14, particularly as I just mentioned, 1395 here. And this could be an interesting one with a pretty tight risk to under the low of Wednesday. All right, next one is in the financial space, JPMorgan. And people have said to me, well, if the Fed is talking about raising rates, how come this isn't doing better? Well, it's not doing that badly, actually, when you think about it. It's still nowhere near where we had our 2021 lows, which was all the way back down here. And it briefly went into a distribution phase, just like I showed you before. Although now it's back in a caution phase because it's back over that 200. So right here, we're getting an inside day. We're starting to show maybe the possibility of a little bit of a leadership here. We've crossed back over here in terms of a mean reversion, just like we did here, crossed over the Bollinger Band, crossed over the Bollinger Band, and we're getting an inside day. So if you wanted to take a shot at a financial space, this would be the one. So right now you want it to clear 163.27. Today's high so far is 163.25. You could actually use a pretty tight risk to under 157.80. And now with about a $5 or $6 risk, you can see if this thing will continue to move up. Again, always respecting the macro in terms of what the overall market is doing. Now, the next one is actually not something I would necessarily trade, but it's really good for information. And this is the investment grade corporate bonds. This thing has started to tank long before, let's say, the junk bonds did, which also tanked and is also coming back. So that actually improves the overall breadth of the market in the macro. But what I like about this is this one has been in a distribution phase because you could see the 50 never closed below the 200 here. And now after a mean reversion trade, well, not quite in momentum, but definitely in price, this is actually sitting right here at the 50-day moving average with the price right under. So what that tells me is I wouldn't necessarily, like I said, trade these corporate bonds, these high grade bonds, but I would use it for information because if we get two closes over 133 or back over that 50-day moving average, that at least tells us that there are bond buyers coming in back to these high grade corporate bonds. And considering all of the different corporations that have been buying back their own bonds, they're probably looking at this as well, saying, gee, maybe it's time to buy back some of my old bonds. Now, this one I wanted to give you is industrial defense. This is Northrop Grumman. And I like this one too, because again, distribution phase going right to the 200-day moving average after making a new 60-day low, but at the same time, holding the low that we had back in September, getting a little bit better in the momentum and showing leadership against the SPY. So with this one at this point, I would say right now you got 345.91 as your low to trade against. You can even go a little bit lower if you wanted back here to 344.89 to give it some room. And if we can get today a close over the 200 and then Friday when you hear this, a second close over the 200, that could also be an interesting trade going forward. Next one is one that so many people love this stock. and yet it's done nothing but absolutely collapse. And this is Palantir. Now, Palantir, I keep watching because I keep thinking at some point, this poor little stock has to reverse. But so far, it absolutely has not. So in this case, what you want to do is just keep this on your radar because it's very oversold. It's made a new, let's make sure that's a 2021 low. No, 2021 low actually is down here. So you've got room to about 1695. It's getting short, it's getting close there. And now if this becomes the low and it comes back and trades through 20, this would be another one that maybe I would say a good company, but perhaps a little overdone. And look at this, it hasn't quite gotten to your death cross yet, which means we could see a rally up to test these moving averages. And then at that point, take some profit and see what happens from there. Next one is PayPal. Now, as we're getting into the holiday season, it's possible that PayPal could get a boost, certainly showing some divergence here in terms of the fact that we're getting momentum on this as it's been here near the lows. And of course, no leadership at this point. But the other interesting thing is the inside day. Now, this, if you go back in time a little bit, you have some good support here under these lows right here, if you go back to around here back in 2020. So I would say really 175 is a good area to hold up here. Now we are getting an inside day as I'm talking to you. You could use 179.15 and change. And if it gets a close as we end the week over 190.35, that could also be a good situation for PayPal. Next one, I was so bullish, but money management and trade management got us out with good profits, by the way, but this is silver. Now, silver is also making a new 60-plus day low. It did yesterday with an inside day, and of course is back with a mean reversion trade here, only in price, not in momentum. But the momentum isn't that bad, so that's why I'm looking at this. The last time the momentum was down here, the price was a little bit higher, but still, I would say with silver, if you want to get back into silver, if it holds around this 2050, I would probably be looking to get in back over 21 to see what happens from there. Next one is Uber. Now, Uber, interestingly enough, is one of Goldman Sachs' big picks for 2022. Well, of course, that was before the variant happened. But nonetheless, what's interesting to me on this one is this is another one. It's in a bearish phase, getting an inside day, somewhat of a mean reversion, but not in momentum. So that tells me if the momentum clears back over the Bollinger Band and we can get a move over the high of this day right here, which is 39.50, then it's possible with a risk to, let's say, under the low of 35.80 with a little bit of fudge, that this too could make a move higher. After all, everything has gotten knocked down, but that doesn't mean that Uber would not necessarily be a good stock, kind of like JetBlue as we're going into the next year. Next one is value. And this I really like here too, because you're getting back over the Bollinger Band here on real motion. So you have a perfect mean reversion with price and an inside day. And after a distribution phase unconfirmed, back to a caution phase holding that 200-day moving average with an inside day. So to me, this is very simple. If you can get a move over the 50-day moving average, 141.50, then it's a possibility that what this is telling you, even if you don't want to necessarily trade it, is that value stocks could actually do well after we've seen a very long period where growth stocks were all the rage. Now, next is one that I was in and lost some money on, XME, and this is, metal miners. And again, inside day, back to a mean reversion, not quite yet in momentum, new low here, 60-plus day low. So what we want right now is, again, we want to give this a little bit of room and a little bit of time. But if it can hold back over 41 and we start to see the momentum clear the Bollinger Band here, then it's possible that around 39.40 is your max risk, and this can go up as well. Now, since I talked about small caps, believe it or not, I actually am showing it to you as one of the bottoming potential plays. Here we have a mean reversion both. You could see here it's going over the Bollinger Band in real motion, and it did it in price. Another one of those inside days, which of course is not so unusual when you have a huge range bar like this one. But more importantly, this 215 level is extremely pivotal right here. If, as we're going through the rest of the week, at the end of the week, we can get a move, let's say, above 220, 219, 220, wouldn't exactly clear the 50-week moving average, but it would at least give you an opportunity to think that perhaps the worst is over. So keep this one, again, if you're not going to trade it, at least for information in terms of buying anything else. Now, I've included FXE here because the dollar, although is stronger again, could actually wind up weakening just in case we're prepared. Now, nothing here in terms of mean reversion trade. You could see it showing leadership over the SPY, which is interesting. But it also looks like after an exhaustion bottom here, and that's really interesting here. You've got an exhaustion bottom. You can even call it an island bottom with a gap up. We haven't been able to fill that gap and looks like almost like we're flagging. At this point, I would want to see DXY break 95.50, but at the same token, this has to get through 106. And if it does, again, that could be actually a good opportunity to look at some of the emerging markets that have gotten beat up. And a couple more left. Another one that I've shown you before as well, which is consumer staples. This too, really high on my list. On par leadership, definitely showing some gain here in momentum. We've got the distribution phase that didn't confirm with an inside day and the 50-day moving average right here. I'd be looking for a couple of closes over 71.21. And I would probably give this room, but you could also risk very tight to, let's say, under 69. And two more left, PBW, which is clean energy. I did a whole thing on clean energy. We got stopped out of this one. This is why you always have rules. We were long up here. We got stopped out when it broke the 200. Now you can see it's below the 50 in a bearish phase, actually, but finding some support potentially around these lows at 79.50. What's so interesting is that it's still hovering around the 50-day moving average. So there's still a little bit of an interesting positive divergence here, which tells me if we can get back up over the 50 here, and we can get back up and close, let's say, over 81.50 in price, then perhaps the worst is over there. I still think this is something to keep your eye on for 2022. And finally, I want to leave you with a biotech stock. This is Bluebird. This one, again, got really killed after it was a great move up, and then earnings just slaughtered it. It's actually gaining in momentum here. As you can see, we don't have any information here in terms of the leadership, but although it does look like the 50 is going to clear back over here on the SPY, against the SPY. But what I like about it, same thing, is that this has been pushed down, pushed down, pushed down. And now we made a new low on Thursday at 984. If this thing can get back over, say, 1075 to 1080, that also could bring a big short covering rally. Again, we'd be happy to see 15, thrilled to see if we see back up to 17. So I hope that was real helpful to you to be prepared just in case this market is prepared to hold and we see more buying come in. But again, watch the macro, watch the junk, watch the IWM, watch the usual suspects. So I hope that brought you a lot of great ideas to look at as we get into the rest of 2021 into 2022. At this point in time, it does look like some of the big growth stocks would take more of a hit, and some of the stocks that have been beat up might be actually ripe for a buy. So you will have a great weekend. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.